The ceasefire countdown, everybody is watching and waiting. Is this going to take longer or shorter? And how is this affecting the markets? Today we'll break it down for you. Let's get into it. I do want to thank our sponsor, and that is iTrust Capital. In times like this is where things are volatile. You should be looking at diversifying your assets. One of the ways to do that is in a crypto IRA. You can do that just by joining iTrust Capital, getting in over there, and of course buy and sell crypto as well as gold and silver inside your IRA. No fees on the monthly. You only do it for your own transactions that you make inside the account. So check it out. I want to lead off today's show with a clip from Fox. And this is some new developments that are starting to hurt the market, and we will most likely see more pain coming. Take a look.
There are new developments in the war, and they are hurting the market. 3 ships attacked in the Gulf, 2 of them, tankers, set ablaze. Energy Secretary Wright was asked if the Straits of Hormuz could be opened by the end of this month. He said he was hopeful. Goldman Sachs says if the closure stretched into April, oil could get close to $150 a barrel. The Iranians have threatened to attack any banks in the Gulf states which do business with Israel or America. Goldman Sachs has told some workers in the area, work from home. And here's the impact on the markets. First of all, oil. It hit $100 a barrel before backing off, but it's still well above $90 a barrel, 92, 93 right now. That's up 6%. Gas going up some more. The average for regular is now $3.59, getting close to $3.60.
All right, so there you have it. Biggest issues, I think, here are what we're seeing inside the GCC. And you look at that, the banks in the Gulf now are evacuating, just like you said, their offices. This will most likely start to roll over into other businesses. So when you look at the market and the economy within the GCC, remember you've got Dubai in there, Qatar, and many allies that are lined up within there, including Saudi Arabia, all of which are now attack zones for American and Israel interests. This, of course, continues to put more escalation into the market. And also, it does affect some of the key things that start to move throughout the Gulf states. And his statement is still around 3 to 4 weeks. And if you look at the bottom, when you look at this, we don't want to leave too early. We've got to finish the job. And of course, right now, the stocks are continuing to fall. I think the key here will be how the market's energy starts to impact. And then some of the other things that could be starting to get affected here, which I'll cover in a second, because there are some other things that were not being affected, but now they are, and it causes effects on the market that in most cases are going to hit inflation, they're going to hit market price, and we're also going to see this in the stocks and bonds area as well as crypto. So there's a lot kind of boiling up right now. As you look at the U.S. and Iran ceasefire potential, it has moved heavily into June with 61% there on Polymarket. Volume holding fairly well on those top 2. And this isn't, when I say volume holding fairly well, meaning these are the 2 potential dates that we could see an end to all of this right now, pushing into May for sure. So let me know in the comments down below, do you think this goes all the way into May or June? What month do you think this would start to end, and how this maybe goes into a retracement in the markets and or recovery? Because right now we are looking at some problems. One of the things that is a problem is the price of oil. Another 10% up on the day, rising to almost $100 a barrel. Likelihood is we will see $100 a barrel pricing in a very short period of time. This also puts more pressure, I think, on Trump, because this affects everyday Americans probably the most, other than groceries. And now we may be seeing that as well. I want to go to a clip real quick, because this will get into Trump's thinking of where we are right now. Take a look.
We're doing a great job. There's never been a better year for a president. I mean, I've been rated. There has never been a better year for a president first year than what we had. That includes the stoppage of 8 wars with a 9th to come. And what we've done, the economy is roaring. It's phenomenal. That's why I'm here. This is an excursion, a little excursion, and I think it's only that. And in that little time, that short period of time, we've taken care of business. We took care of a country that was very dangerous, very bad, would have had a nuclear weapon if it weren't for me and the B-2 bombers and what we did not very long ago. They would have had a nuclear weapon, and we would have had levels of problem that nobody has ever seen before.
Got a crowd in Northern Kentucky.
All right, so a couple of things with that clip is I'm wondering if Trump is starting to get bad intel, bad information from all around him. And I'm not talking about just issues within what's going on in the Middle East, but economically within the polls and what he thinks has been the greatest year ever. I think he is starting to get a whole slew of bad information. It's starting to affect, I think, many of the judgment calls he's making. And remember, Trump operates on judgment calls. That's the way he gets going. If you look at the cost of what it's costing the United States right now, we are rolling up on 18 billion, and it is about $1 billion a day when you look at it. Loss of life is already significant. And of course, you've got one of the biggest issues, which I think is the fact that this is having a rolling effect on not only the loss of life, but the loss of Americans' livelihoods, what's going to be affected in terms of their savings, their mutual funds, all their 401ks, et cetera, that are going to be hit on this because of the valuation that the market is yet to respond to. And as you can see right here, oil nearly $4 a gallon, 8 troops dead, 140 American troops wounded, American tankers being bombed. This is not looking good. Epstein files still, and of course Trump's out there partying with Jake Paul. I just don't get it. I would think that right now we should be focused in on what's happening in the Middle East, figure out a way to dampen the issue here economically in the United States, because this will continue to be a big deal. And Anthony Scaramucci kind of hits it right here. Trump now gaslighting about gas prices, saying that higher gas prices are good for America after previously gaslighting about lower gas prices. He has now lost independence and the principled right. Now that we just have to figure out how to get and weather 3 more years of this as damage starts to grow. And I think that is right. He is starting to lose some of the principled right. People that look at this administration and say, listen, I voted him in for a certain few things. He has gone way above what we anticipated. And now we have entered in the no more wars phase, which is what's happening now. And it's getting worse by the day. And of course, you've got Iran saying, listen, you should be ready for $200 a barrel. And if it gets to that point, I can assure you, you're going to look at $8 a gallon gas. And at that point, the American people are absolutely going to draw the line. And I'm not saying they shouldn't be drawing the line well, the other thing they would draw the line is if we send in ground troops, things of that nature. But I think the other thing is economically, you have to consider all the impacts that are now starting to get hit here in the United States. And of course, now the question is how much is too much to absorb? Take a look at this clip.
This level of activity and this level of shipping traffic that we've seen disappear from the Strait of Hormuz is just too large a loss from the market. So that market that was flexing, the longer this goes on, it's going to flex until it actually snaps. And I just, again, want to put that number in perspective, that 15 to 20 million barrels a day. To replace that, that's roughly the same amount of demand we lost at the peak of COVID in 2020 in March and April. So the question is, and again, all of this is predicated, if the strait remains closed and we need to destroy demand at that level, we need a price that will effectively simulate and stimulate COVID-level demand destruction without a pandemic. And for me, at least, that would be an exceptionally high price.
So there you go. An exceptionally high price could be the key going forward quickly. Other things that are being affected right now is what we're dealing with farmers. That's right. Now farmers are being affected for the first time. This is rolling into the issue around fertilizer. Let me play this clip for you. It explains a little bit more of the impact on farmers. Take a look.
There's been some predictions that fertilizer will go up another $100 a ton on top of losing money as it is. So it's really sad that the farming has got to the point where we're losing money to even be doing it. And then with things going on like it is, there's so much uncertainty.
We're used to dealing with markets going up and down, but when we see such a large increase in such a short span of time is what really makes it harder to deal with.
We have a lot on the line from day to day, and at nighttime sometimes it can be hard to sleep.
A lot of guys have just said, I'm done. We're going to quit. They're hanging it up. There's sales everywhere. Lots and lots of farm sales. Financially, it's causing a lot of mental health problems as well.
This is a big issue because this is the core of the voter base for Trump. But also, it doesn't really matter in the voter base, but how they would support the administration for the next Republicans or possibly the Republicans in the midterms. You look at this, though, right now, this energy and fertilizer cost jack that's happening right now could and most likely will push grocery prices higher. So now you've got higher energy and higher grocery. That only leads to one thing, guys, and that is higher inflation. Higher inflation, of course, continues to put more pressure on the Fed. That puts more pressure on the markets, and this only gets worse if this continues. This, of course, is the Iranian Supreme Leader, the new one, that has come in. And one thing that he highlighted right here, he's more hardline than his father. His demands from the U.S. are extensive, and he is ready. One could say that he prefers a prolonged war. And that's the concern I have, is that this becomes a much more longer war than anyone anticipates. And if the market sees that kind of issue playing out, that could be the catalyst that we could see where we start to see things go really awry. And this, of course, is another factor, is you got to look at what's going on in Cuba. Cuba, of course, now even being looked at, propped up by China. This, of course, is a U.S. strike on Cuba. This was at pretty much nothing right here on February 27th. And then, obviously, after the Iranian conflict, here we are hovering at over 40% now by the end of this year, that Cuba could be in line for more U.S. intervention there. And by the way, this is coming in from Kobe EC. You guys should be following these guys. They're doing a fantastic job on keeping the updates going. And then he'll go into in depth. They're really good headline breakers, but this is a good example right here of China and Cuba have now agreed to boost bilateral ties. This is only 6 days after Trump said Cuba will fall pretty soon. So these are the kind of things that don't look good, because it's these little nuances that become much bigger, then they become problems, and then when those problems fester, they become issues not only in the market, but also in the fact of culture here in the United States. So it starts to draw the line for sure. And the other thing you got to look at is, where does it draw the line? Well, it draws the line on a lot of things like we have seen in the past from previous administrations that I thought was gone in this administration, but it's not. It's right here. Hexas goes out, spends $93 billion in 1 month, making it the highest monthly expense since 2008. And then extravagant spending there. I mean, these are the kind of things that you are going to start to see heads roll, because Trump will be able to divert blame onto many of these. You've already seen it with Kristi Noem. She's been outed. Pam Bondi is going to be next. Who would be next after that? Could it be a Hegseth? Could it be someone else? Maybe. I think that if we continue to see the problem with the Clarity Act, it's going to be David Sachs that starts to get pumped. And you've got Kristi Noem, of course, she is out already. Pam Bondi, this is the one we think is most likely going to be in a position of exiting door left because of her inability there in her job as well. So, and again, it gets to the point that I'm getting at, which is a lot of the cabinet members that Trump has been placed in may have looked like they were on par in the beginning. Now we're starting to see their work record and how they're doing it. This is going to get ugly quickly, so big problems. JP Morgan come in and say, hey, just long energy stocks, because right now, unless they get this straight open, this is going to be a fight for energy, and we are in the middle of it right now. And then, of course, the stock market, if you compare this, and I'll show you the chart real quick, this is the S&P 500. Let's go up here. The last time we saw a fall was right there on the Trump dump, and that was a 20% fall into the market. Market, of course, recovered to that. Trump could have claimed victory easily with where we were at over almost 7,000. Now, here we are starting to roll over the top from right there, which was right around 7,000. Here we are bumping down at 6,600, down 5%. Likelihood on this is a 20% pullback would be the thing that most likely will happen if we get another black swan or one of those events that start to cause more concern in the market, or the elongated conflict in Iran. That will be the one that I think continues this market downward. So even though that is happening, I think crypto has been in just a wait and see, fatigued phase right now. crypto fear and greed, setting at 28, quite a bit higher than we were, but definitely at 28, which is not significantly better than what we have seen in past bear markets. The real question is how long is this going to last? Are we going to see any light in the tunnel? Because most people would say, well, if all these bad things are happening, there is possibly going to be a flight to safety in digital assets. Some people might say, well, that or gold, but gold has not been moving. In fact, gold is also stalled out. Bitcoin is stalled out right at 70K. We saw a little bit of movement this week. But again, these are the problems when people are just paralyzed. They don't know what to do because of the inability to see any light at the end of the tunnel, and that's the problem that we're dealing with. One thing that is happening, though, is that BlackRock just launched their Ethereum staking ETF. I don't know if this is good timing or bad timing, but the point is, could be a rotation into ETH. This has been a significant move because now, if we're trying to outpace inflation, assets are going to be the only way. But the problem there is if assets continue to drop because of these global and economic problems, you're dealing with the counterbalance to each and every one of those issues, which is why I think we're seeing less gold purchases right now and more money going into stable coins and, of course, cash. 1.8 trillion in private credit market is witnessing an exodus of investors. This is another factor that is another big issue that could cause a major move in the market. I'll highlight one of the things in this article right here. It says this week's major players, BlackRock, Blackstone, face rush of withdrawals from investors spooked by the chaos. This gets back to my point. 26 billion in HPS corporate lending fund out. Then you look at, these aren't isolated incidents. Private credit has boomed because it offered retail investors access to higher yields from loans to mid-sized firms. Now you've got all these companies starting to either default and or have problems in renewing loans. And this is where we're dealing. Now those loans are long-term, typically 3 to 7, and tied to assets that aren't easily or quick to sell. So this is the problem that you have with private credit, which will only put more pressure on the S&P 500. So there you go. Clarity Act signed into law. We were setting it around 60%. After the banking summit that we aired yesterday and showed what the banks were really up to, it has dropped down to now a 54% probability, almost a coin flip right now on Polymarket, as you can kind of see what's going on right here. And the reason is this. Banks are clearly coming after not just stablecoin yields, they're coming after everything. If you go back and watch that video that we did yesterday, it is a breakdown of everything they want, including DeFi. Self-custody could easily be thrown into this mix. What we're going to see is much more than what we're seeing right now. And it was kind of showcased in that summit that we did yesterday. We started the change.org petition yesterday, and we're nearing 6,000, I think. I haven't refreshed this in a little bit. So yeah, nearing 6,000 signatures right here. We're trying to get this up to more so that we can at least start presenting this to some of our lawmakers and show just how important this is. So make sure you guys use the link. We'll try to leave one down below, or you can follow me out on Twitter. I usually drop it there. It's just @PaulBaron. One last point I want to get at. This, of course, is JP Morgan just been sued by investors for allegedly participating in a $328 million crypto Ponzi scheme. And this was, of course, revealed in the lawsuit. And a lot of it generated around this thing called Goliath Ventures right here. And this guy was arrested, so their CEO. But investors say that JP Morgan knew, not suspected, but knew what was going on. And this will be a big deal if this goes through. So it's just more issues of these banks continuing to put pressure on the crypto market. We've seen it all around. Now we're seeing pressure from global and economic issues that are happening from what we're seeing obviously with Iran. But the problems are getting worse by the day, guys, as we start to try to figure out how to navigate this market. We're going to be coming to you with a wrap-up this week, so stick around for that one. If you like this video, hit like and subscribe, drop a comment down below, and also join our free private member group. The link is in the description.